Hello, everyone. Mike Arnold here, co-founder, Path Trading Partners, along with Bob Iacchino. How is everyone doing? By the way, if you are new here, please consider subscribing, ringing that bell, and hitting that like button. Longer-term subscribers and viewers, please like the videos and leave some comments. So, real quick, sorry I couldn't change the tie-dye against the green screen. I have one of my dogs at the emergency vet, so if I have to leave and cut this short, just letting you know that is why. And there probably will just be one live stream this afternoon. So, just letting you know what's going on. But I still am here. Let's see who else is here. Hi, Amit. What's up? Feel a little left out. I've not traded much. Yep, and learning these things and applying these new techniques. You are welcome, and that's fine. There'll always be time to trade. And these are tough markets to trade in anyways, so you're not missing that much. I mean, this isn't the easiest trading conditions. So keep learning, working on it, develop your trading plan, which I hope everybody has, because if you don't have a trading plan, you're playing with fire. Hey, Davey, 61.6 chance of a 75 to 100 basis point move in May. Yeah, we look at the FMOC. Maybe it bumped since then, but last I saw it was a 57.2. And, you know, there's a couple different tools people look at. But that's what's looking. I told you I thought they would be hawkish and try to talk the markets down. And they were hawkish. I mean, Powell was out today saying they could do 50 basis points at any point. So don't just be feeling that this 25, you know. And he also talked about interesting statement today was they focus on the shorter. He says he focused on the shorter end of the yield curve. I know all the people I've been talking to have been keying off that 10-2s because they're just hoping that goes negative. Again, it's still buy the dip because the Fed won't be. I mean, people are still talking. You know, these are junior people that haven't been around the block as long and haven't been not involved in the market since we've had Fed pumping QE time. Okay, so that's why they actually don't know how to navigate without like QE or. I mean, we had a little quantitative runoff back in the taper tantrum in 2018. But besides that, everybody just wants the QE back. And we got a position for it. And, they might have to cut again sooner rather than later. So the market's forward looking. So we might as well just buy it now. I'm not buying the argument, but we got to trade the price action. Here's your S&P map. Real mixed bag today. Real mixed bag. So some stuff up, some stuff down. Oil stuff up, but not across the board. We'll take a look at that. Again, I'm still watching for that sell signal. And one other thing, just because I say there's a potential sell signal, it's like there's a potential double top. We wait for the market to trigger and roll over. We don't just sell. So I don't like to see getting contacted with, you said there was a potential sell signal, so I sold. All right, potential means potential, just like a potential buy signal is still a potential until it triggers. We're not trying to call tops or bottoms. It's a fool's game. You try to take the chunk out of the middle. Also, Amit, real quick, as Amit again said, he's learning stuff. Couple things. Learn to trail out of positions for your last little bit. So if you're practicing, practice trailing out. And why do I say that? Because, all right, let's jump to crude real quick. Am I still watching for a potential major sell signal? Yes. I said this morning where I keep my stop, and we have the rising rotation zone on the 4-hour, and it's still pushing up. Updated the harmonics. Look, we could still roll over anywhere up to 116.60 area. You know, if we start getting above 116.60, then I'm getting more aggressive to just hold those longs, and I'll probably pull back the stop a bit just because I don't want to get whipsawed out. Other than that, you trail. Because could this thing keep going? Could it go to new highs? Sure it could. Could these sell signals never trigger? Sure they could. So that's why learning to trail out is a very strong thing. Now, you know, if there's another double top pattern setting up like on a daily or a 4-hour and that triggers before my stops hit, that could be get out of the longs and start watching for that pullback. Don't have it yet. don't have any other topping pattern. We had this little one that just came back down on the 4 hour, and I'm really focused on the 4 hour, right into the 4 hour rotation zone, rotating back up. So if you want, I'm watching major to 4 hour and the daily on crude, and of course the weekly. Now, let's see who else about here. Sterling says craziness. It is craziness. It's by the dip. Look at this. We had this. There's the dip. You see the dip right there? Back up. And I'm surprised we did not get an even bigger dip with the Powell statements, because they say, again, they were very, very hawkish. But everybody's just backing by the dip. If you look at the VIX, I should really just put this on. I just wish they would provide me real time on this platform. Well, here's your VIX. There's no fear. There's no fear. There's no nothing. This is just slowly dropping back down, slowly unwinding. So there's no fear. It's back, you know, and I said this reminded me of after the initial big sell-off in 2000. This was the same kind of stuff that happened. Let's take a look. We had that potential double this morning on that 1 hour. Then we came down, didn't trigger on the S&P, came up and forming a triple. So that's why that doubles off. All right, and you see here 4 hour rotation zone, just dipping in the 4 hour rotation zone, but rotating back up. Now this technically, I'm actually moving my harmonics to today's high, because it's a really nice pausing bar on that 4 hour area. So could we easily push higher tomorrow? Yes, we could. This is also a great little area if you want shorter term targets to use the little mini harmonics. Again, this is if you're more looking for areas of resistance, and that's just a little reverse harmonics. What am I watching for? Not going to really get into even a bigger pullback mode now until below 43.90. Hold on. Sorry, I'm just glancing at some messages to see if I got one about the dogs or the dog. 43.90 4 hour rotation zone is really what I'm focused on overnight. If we have, I'll just list off the levels, but these are really minor levels. These aren't the major ones. I'm 44.80, 44.87, but 45.14 is the next major level that I'll be watching should it rotate back up. And again, we're bumping against the 200, so this is already softening it twice. And then remember, we have this little move up here, and it's already above this. It could get above this stopping point really quick, so you could easily make a run to the mid 45.50s again. And then you close above the 62.5, we could even make a higher run. Crazier things have happened, so don't get surprised. Now, it is still overbought conditions. Can we still get a pullback? We still have favorable conditions for the pullback, but I need to see right now something a little more breaking down. I mean, aggressive. If we start breaking down, I won't be doing anything really with the markets tonight, but aggressively, if we start breaking down, I'd just be targeting back at the bottom of the 4 hour rotation zone. You start closing below there, then I'll start watching for that bigger pullback. Well, that is, I mean, sometimes the best trade is no trade, and sometimes markets are just not conducive to, especially over trading, and this is not a market that's conducive to over trading. So, by the way, if you want me to look at a couple stocks at the end, if I do have some time, we might just tack them on here, and I'll just do the single live stream. The Nasdaq again, right off the open, triple top, spiking back down, and then reversing back up. So here again, 4 hour rotation zone, just barely in there, but this key significant level hold with the 12% harmonic could not get a key close below that on a longer time frame, and just rotating back up. So similar to the S&P, just for those people following along with harmonics, I'm just updating it because this is a really nice pausing area. And my major support coming in about 14,090 to 14,100. So that's what I'm watching overnight. We'll have to update the other levels tomorrow morning. Let me just get through some of this. Again, still an overbought. Still, we could push higher and form a divergence. So I will still watch for topping. areas, but again, 4-hour rotation zone, and it looks like we did get the first cross of the daily rotation zone. So technically, on the daily, it's back in bullish mode, and that's just something we never trade crosses. It's just something to keep our mindsets. All right, short term, could we still have higher prices? Yeah, even with a pullback, you could pull back to this area and rotate back up. That's why I try to do that. It helps keep people's mindsets in line. Dow is interesting. Show you this. Dow spiked up and then came back down. Now I said I'd use the conservative targets. That's why it's on this side. See, before I had it on this side and I moved it to conservative because this is slightly lower, and bam, straight down right there. Now this double did not get invalidated because you see there's no triple. So it was still valid. So those price targets were valid to use even for shorter little positions. Also, what's interesting now is, let me redo it. You have this little mini double again with this and the first two targets. Even if you're going to use the aggressive targets, they are still within here. Okay. So this actually triggered another mini double bottom pattern. You can see it because this is not a triple because it did not dip low enough. So this was qualified for double. You can see it on the 15-minute. And if you use conservative, it would have been here, which had already hit stop reduction. I'll just leave it on the aggressive targets for overnight trading. Again, 4-hour into the daily rotation zone, completing that little double and rotating back up very nicely. The Dow is lagging a bit. So if that's the one I'm watching, if that starts breaking down and my key level is about 190 to about 35,000, we get an overnight close below that, then I'll start watching for potentially at least that puts cracks in the armor. Russell, that little mini double top coming down, hitting that 4-hour rotation zone and rotating back up. If you want to know, this would have been the conservative targets. That's the base. And you see here, coming back down, hitting there, completing the targets and rotating back up. Just showing everyone some techniques that they can go with. It still looks like this is basing right up here. So if we really start getting that momentum move about 2084, I'm still watching for a potential run to 2136. No, it doesn't make sense, but that's what it is. DAX just holding basing earlier at its highs, working off its overbought condition. You remember, this is a perfect aspect of, so far, it's been a sideways correction. So you see it's dipping on the daily and the RSI down here. And on the 4-hour, you see how it's dipping down by moving sideways. Now, what would change it for a pullback correction? You start dropping below about this 14,235. I watch for the gap fill. Then it turns into a pullback. But so far, this is a sideways correction working off oversold conditions. I mean, overbought conditions. Crude. We looked at earlier. I updated the key levels. The major next area I'm watching is about this 111.80. You have this cluster. Let me zoom in. The harmonics, the forward harmonics, and the retracement 50% level, and you know how important that is. You can just go off 112, and then above there, we're at 116.60 area. A close above that, then I'm watching for at least a return to possibly 125. What would change anything? I am again keeping an eye on the 4-hour rotation zone. Even a pullback, the first little pullback area would be a 107.40 at this point. And then I have this nice trend line in here. And even coming back to this prior resistance becoming support with the rising 4-hour rotation zone and the hooking up 50, 104.50. So I'm not doing anything to the short side until below 104.50. Now, if you're managing individual positions like XOM completed that double play today, which triggered last week, triggered back on the 17th. And I think I've had this on in some of the live streams. So that play was complete. Now I'm still watching. Is it going to, potentially roll over again if crude weakens and form this shoulder, head, shoulder pattern? I'm still keeping an eye out. Until then, Next key areas I'm really focused on. Miners is 82.70. I'm actually going to update this now. Let me do it with this pause area, this little pullback, because really right now we have a gap in here. So above about 83.29, the first harmonic. Miner would be 84.07 just because you have this base and a harmonic there. And then I'd be watching for the gap fill. So if there are still potential upside plays in something like ExxonMobil, what starts me to get concerned on this? Again, we start breaking below today's low and filling this gap. And the gap fill is to the close, not to the open. Keep that in mind. So it's the bottom of this candle body, not the top. You might see a pause at the top because there is a pausing area right here, but the full gap fill would be to the bottom. And again, I'm not getting super bearish until it triggers the potential head and shoulders, because that would also be back below the 50. So that's your little stuff. I just wanted to review some concepts. Now you have to also fine tune this, because if you're in something like NOV, which I know some people are in, this, you see Exxon was up. A lot of the other oil stocks were up, but this is relative weakness in an up market. Let me try to find, where is it? Where did it go? Hold on one second. I don't see it right now. I'll have to, here it is. There it is. Sorry, I had a lot of stuff open. You see here, here's your oils, and a lot of stuff were very strong green. All right. You see all this green? I mean, Exxon up 4.49, Chevron 1.8. You got COP, ConocoPhillips, up 317. Then you have something like NOV down on the day. So this is weakness in a very strong sector, and oil was up today. So that's what I'm talking about. This would be a play especially if oil starts rolling over, don't want to be in it anymore because it's already showing me weakness. I would rather be in some of the strong boys than the weak boys. Because yes, oil rolls over, they'll roll over, but they may hold up a little better until they trigger a pattern. That's why we also don't front run a pattern. What YINN? What is YINN? I'm not recalling the symbol right now, Rich. Amit, one of the things I'm confused on and how to know it's all about price. What got the markets here was cheap liquidity, but with the Fed tightening seems completely opposite, like risk on and party on. Yes, and that's why it doesn't have to make sense. That's why at the end of the day I have to trade price action. And people will trade, here's one of the things I've learned, especially with, I'm just going to use, I'm not picking on this group in particular, but the buy the dip mindset will always come up with, Fed's not very hawkish, it's buy the dip. Fed's too hawkish, it's going to lead into a recession, they'll have to start cutting, or they'll have to start cutting like after one or two hikes, buy the dip. It's because it doesn't have to make sense. People are going to do what they're going to do. And that's why the price action will bear it out. Okay, you can think all day long, the market should be lower on this news, the market should be do this, the market should be doing that. The market's going to do what the market's going to do. And we still have a collective mindset. I'm telling you, there is no fear. It's why I started mentioning it. Even before the last rally, I said it's still got the buy the dip mentality. I think 2 weeks ago I was saying that, before this latest major rally. Does anybody recall that? So that's why we have to trade the price action. By the way, gold, pretty flat still here, inside date, or I don't know, did it make a new low? It was very close to an inside day, 1922.20, 19. Yeah, it barely eked out a new low. So I'm just keeping an eye on this. Pretty flat day in gold. Little up down silver, holding the rotation zone. But again, not doing ad already, we're already positioned in this. Now notes, look at this. I put on this harmonic. I'm like, that's going to take a few days to hit it. 123.04, getting getting down there close, little bounce at the end. But look at this with your yields. We already went up to the 231 area, and little pullback at the very end, but not much of a pullback there. You can see that on the 15-minute. So that's where we're sitting with that. Could we easily pull back a bit? I'm going to keep an eye on the 1 hour rotation zone just because it's so close. But that was a rip your face off move. Here's those 10-2s. 10-2s. Edging down. This is going quickly. This is getting quickly downward. Your 10-5s, clearly negative. Your 10-7s, look at these moves. Your 30-20s. So we have some, and that's what people are focused on, inverting the 10-2s, even though he said they're watching the shorter end of the yield curve. We should ask Bob tomorrow. I have not had a chance to talk to him yet. What he thinks they are watching in terms of the yield curve. Michael, Bob was saying something about yields above 2.25 are not good for tech long term. Yes, you are remembering that correctly. And even raising rates, that's why people were selling tech before, even with the guise of they're going to hike even a quarter point. So that's what, but it's just a shifted mindset. Now tightening is good because they're not going to be able to cut or hike as much, and they're going to have to cut, and we're going to get QE back. So the mindset shift to, okay, hikes are now bullish because it's going to throw us into a recession and then more cutting and more QE. And everybody wants QE back because QE makes trading very easy. Overall, when you're in an asset pumping environment, it makes trading very easy. Even for people not good at trading, it makes trading easy. This kind of environment makes trading really easy. This kind of environment makes trading really tough. Let's see. BP got a potential daily double bottom within a larger triggered weekly double bottom. Let's take a look. I did not look at BP. Well, we have a double. Did I read that wrong? Oh, no, I didn't. My head's sorry. Yeah, we still have this longer term double. And you know what? Even with a pullback in oil, BP to invalidate this pattern would have to come all the way back down, like in the $17, $18 range. Okay. Now, well, BP got a potential daily double bottom. Yeah. So, and look at that with the harmonics. Boom, boom, boom. That's how you can still use those within there. So you can still combine, especially if you're swing trading a bigger term pattern and not just sitting on it or trading around the core position. By the way, Amit mentioned, highly recommend Mike's crazy classroom on trading around the core position. I highly recommend it too. Let's take a look at this mini double. And thank you for pointing that out. And it is completely valid off the 200. And it has not triggered yet. It's a little sloppy in here, but we're going to go with it. And it's reversing especially this move. So above, what would make it trigger? Above 30.27, 31.63, 32.30, 32.98. So that could be another potential trade within a longer term uptrend. Now, could everything roll over and that not trigger? Yes, that's why we don't front run this. If you're already in it, I would not be adding to a position until that triggered because you're already in it. And what if this never triggers and it rolls over and I'm already in it? Well, then it depends your time frame and your long-term objective. If your long-term objective is to eke out a lot of this massive weekly double bottom, I wouldn't be doing anything. If your short-term objective is to swing trade around it, then yeah, you start breaking below this 200 area again. You could consider watching for a bigger pullback to reestablish your core position. or lighten up your core position and re-add back at another bottoming pattern or a very key support area. Thank you for pointing that out. Let's see. YINN, thank you, Rich, is the footsie. Thank you. I completely forgot about that. But Texan is still going up. A lot of Texan is still going up. And, you know, I'm seeing this. We could still get rallies in these tech stocks. I'm telling you. It's just that environment. It's just that environment. This could still be a buy on a pullback unless the Nasdaq really starts tanking. Even on a slight pullback in the Nasdaq, this could be another buy position. You have easily room to run back up. You know, the first key area I'd watch if you're already long is right around, you know, right around 183.65. But also, let's just do a little quick analysis on the last swing down. You see, close above 62.5. So even on pullbacks, I'm still watching for higher prices. So this is something, pullbacks get a re-entry signal. There could be another play to the upside as long as the Nasdaq doesn't tank. What else do we have? Can you explain the significance of the 10-2 going lower? Well, once it gets inverted, and this is a good one for Bob to explain tomorrow. But from my perspective, you have so many people, if it's under 0 for a month, Fed starts considering major slowdown conditions and how they're going to reposition themselves with that. Now, this time I do think it is different because you can't have inflation ripping people's heads off for the next year. And Powell even said he doesn't see inflation abating anytime soon. So they're finally admitting that their transitory inflation is now entrenched to a certain degree. And he doesn't see it abating anytime soon. So even if you get a little slightly lower readings, he doesn't see it going away. I don't see it going away also. We've talked about stuff like fertilizer, food's going up, gas, even if we stabilize in the 90s or in the low hundreds, fuel's not going back to $2 a gallon. And you can only pass on so much to the consumer that's already drained all their savings. Their savings rate was back to where it was in 2017, way pre-pandemic, and that was not a high savings rate. So the consumer is going to get tapped out pretty gosh darn quickly, and people have to still drive their cars if they have to go to a job or even take their kids around to school and everything else. People still have to eat. So there's a lot of stuff that's not going to go away anytime soon. What else do we have? Fed speak today gave me Volcker vibes. Well, I'll get Volcker vibes if they start doing a few 50 basis point hikes. Then I'll start getting Volcker vibes that they're not messing around. And he said today they could bring it above the neutral rate. I think they're really trying to tell the market, hey, we're not messing around. You're not going to get, even if the 10-2s invert. I think that's also why he said they're watching the shorter end of the curve, because we're not going to base it off that. We're not going to do what you guys think we're going to do. Oh, TNX, not TXN, TNX, sorry. Well, there's my dyslexia. No, the 10-year Treasury note yield, yeah, that's, there's your note yield, but that's where I look at my yields with this in TradingView. But they're virtually the same TNX. And you can do the same analysis on it. That's 231.5, 229.1, and that also, what was the high today? 232. So that's just coming off a little. Thanks, Rich. Thanks for correcting me. What else do we have? Sterling still has 13 free June call options from the last run-up. Well, there you go. Keeping a longer-term bullish position. So you've obviously traded them. So now they're a freebie, which you can just sit and you know, on a continued move through third week in June, you're in a good position in my book, even with a pullback. What else do we? I just joined. Do we have a divergence today in what? We don't have a divergence on the daily. On the 4 hour, yes, we have a little divergence. I'm watching. And now if we start getting a triple, I'll really pay a lot more attention to this. We did get a divergence on the 4 hour in the S&P. We did get a divergence on the 4 hour in the Nasdaq, the first one. In the Dow, we just had the double top pattern. Let's glance in at Tesla. Let's see, spiking up here to this major cluster area at these near highs and pulling back a bit. So basing sideways, working off this spike up overbought condition. Now this is another sideways base. Where do I start watching for the bigger pullback in Tesla? If it starts dropping below today's today's low. Other than that, it's a sideways correction after a spike up into those areas. I know after hours, here was what? After hours, we had Nike earnings. So we can pop in and take a look at Nike. And Nike's up. I know they beat. Earnings and revenue, and their margins were better. So this is actually what. Why is this? Because you see here on the 4 hour, this is technically, you couldn't really see it on the daily, but this is the start of that right shoulder. And now with the after hours data, it's already up. I wonder where it hit. All right, so yeah, this still has some room to run up. So especially this might be an interesting intraday play. Okay, even on a pullback intraday play, it's got the first cross rotation zone. On the 4 hour, it's triggered this. Well, after hours, it's triggered the head and shoulders. We'll watch to see where it opens, but I doubt it's going to come back down below that neckline tomorrow unless something really bad happens. Here's your daily. You're coming up here, and between the first target on that and the 50, that could be an interesting play. And then above that, you have 143.18, then 146.76. I'd bump that just down to about 146.40. Sure, I will. You're not disturbing me. Don't think you're disturbing me. Let's see. I'm just getting this is not something I trade. So I'm just taking a look at it. Interesting. You might have a weekly buy set up on a close above last week's high. As long as you're staying above $4, you can watch for that short-term pop below $4. This would not have held then. 4 hour, we got the sideways correction here. Weekly, you're still against the daily rotations. The weekly rotation zone and daily, you've come up into it. I'd really start paying attention if you get above about 560. 560 would be my level. And then I consider a little play to the upside. Where am? Oh, come on. Wow. Sorry, I'm just distracted a little with the dog situation. Yeah, about 560. I'd start targeting the 604, 606 level, and then I'd start targeting the $7 level. Only above the daily rotation zone, though. And let's see where that fits in. See those minor harmonics, and I definitely raise a stop at that 604 level because it's against the weekly. So you could bump in here and then rotate back down. So that would definitely be a stop the raise level. And then above there, the next target was 7. and that's right in the middle of the weekly rotation zone. So that's the way I look. But if you start breaking down below the low from the 16th of March, all over for me, I'd be focusing on a full retrace gap fill. If you wanted to look at it a different way, the key, yeah, look at the 50% level of this run up is that low. So it could catch on the 62.5 but rotate up, but I'd be focusing, I wouldn't be holding longs into this if you got to close below that. No, it's not. Nope, you don't even need the double top though. It's I can tell you right now it doesn't fit in the parameters. Nope, doesn't fit. But your key thing is you get below this base, you can start watching for these lows, and below that low, 50% level, you know how critical that is, and you got this gap left behind. So that's key for if you're long it, and this is why I'd like to take something off on these kind of run-ups and then trail a stop. So the trail to stop would have to be what, the 410 level? What's this low? 408. So 408. I'd give it 2 more cents of room. HYG looking good on the puts. Little run up and roll over move. High yield corporate bond. Yeah, I mean this is a I mean, I don't see the market can shrug off a lot of this for a long time. By the way, I don't know what put position you're holding, but I would not ignore the 50 to 62.5 if we roll over there to at least tighten up stops to the downside. Again, that's where I will really use it for also managing a short position, because you get in this zone, it's really good. All right, I need to know where my exit point is if we get a bounce reversal back up. But also see, it couldn't even get to that weekly rotation zone yet. Now, if it holds here and we get a strong rotation, it could easily go sideways. I just watch for 8 pushing the price on the daily, but that's a nice play there, Sterling. That is a nice play. Also with this, you have to update your harmonics to the forward harmonic in case it does rotate back up. Anything else anybody wants to look at? Again, with this, I'll just do one today. So if somebody could let anyone know in Discord that there's only going to be one. I think I looked at everything everybody likes to follow. Let's just peek in on a couple more. Apple, they looked like they were doing massive share buybacks today. So not yet an overbought on the daily, and very overbought, but no major divergence trade, at least on the 4 hour. Starting to get divergence on the 1 hour. But again, the trend is still short-term up, especially if it can get it back above. It's trying to pause here. But remember, that gap was filled. So to the upside in Apple, that gap was filled. Again, if it continues up, the end of the clear path move is roughly about 168.40. Microsoft, take a look at that, just pausing on that daily. So if this can really get through that 200, you could make an easy run to back this 311 area. That's what's interesting. There's still a gap left behind here. So that could be an interesting play too. Yeah, I saw that. Thanks for putting it in there. I did not mention that. I did see that on my news feed. Russian sovereign's U.S. ambassador tells the U.S. ties on verge of being severed. Oh, by the way, uranium, which I've talked about, because it's talking about they could cut us off, or again, we could just do a ban on it back to the most recent swing highs. But again, this is, if you don't know what I'm talking about with trading around core position, watch the video, the classroom video. But this is something that's, you can harvest this price and back and forth price action. But this is running up, and still there is some substantial resistance in this area, at least on URA. So if you're considering it, it's could be another potential little short-term pullback there. URNM. We all look at that other one. URNM. Still pull it back above this 8150 significant level, but I'm going to be watching for this daily rotation zone to hold. So keep that in mind. SPROTT. I always forget this one. We can just look at here. SRUUF. There it is. Sprott, and this is the physical uranium holdings, which they actually have to have the physical. Coming back out, really watch this one if it breaks to new highs because that's incredibly bullish on uranium. Can I look at RVLV? Revolve Group. Know nothing about it, but that's a good thing we can do. So you have a triple bottom pattern down there. I just need to get the biggest perspective against the weekly rotation zone. Do they? High PDE, but again, on a pullback, this could be a play even on a pullback for a return to the 200. I mean, it's dipping out of overbought on that daily. I'm just looking at our time frames. Pull back to a weekly or the 4-hour rotation zone and a rotation back up could be an interesting play if the Nasdaq stays strong. And then you're into a clear path move up here. With so first target 58.69. End of the clear path is 61.21 about, and then you have your 200 up there. Where you don't want to see it for any bullish case, I think you already know where I'm going. You don't want to see a move back or a close back below 44.74. Okay, and that would actually be dropping below your daily rotation zone and everything else, so I wouldn't want to see even a move that low. But even so, this could be a potential play to the upside, or intraday you start getting above these again. Not a double top, but you have a couple different tops there. So you have two highs in the same vicinity besides Fridays and today's. That's why it's hard to see. But you get a break above there that could be also a short-term play, a short-term little swing trade, or a short-term intraday play. So that's your overview of Revolve Group. Again, if something happens to the markets and Nasdaq absolutely gets slammed, since this is a high PE stock, you see here, 39.45. Internet retail trade, which, I mean, it's bounced hard, but longer term, after this, if it does not bounce, I'd be longer term, I'd watch for another breakdown play in this. But again, that wouldn't, unless I got a short term pattern, topping pattern, which I don't have yet. Right now, it would be below, the full breakdown play would be below about this 39 level. Other than that, it could be a short-term potential bullish play as long as markets remain stupid. With that, I will be logging off now to deal with personal things. So thank you very much for joining, everyone. Sorry for just the one stream today. Bob should be on tomorrow afternoon, so ask him any yield curve questions. He is the yield curve expert. All right, so make sure you ask those questions to Bob. And by the way, if you're new here, please do consider subscribing, ringing that bell, and hitting the like button. Longer-term viewers and subscribers, please leave some comments. Everyone have a very restful evening, and I will talk to everyone in the morning unless there's some disaster that happens and I'd have to put something in Discord. So just letting you know, I'm planning on being here tomorrow morning, but if I don't have an opportunity to do that and not in the chair at 8, just let people know that there were personal things going on. Thank you, Michael. Thank you, Amit. You are very welcome. Again, thank you. I really appreciate everyone being here and making this a wonderful trading and investing community. Bye for now.